too.
What's up, everybody? Dave Bartosiak, and I've got another chart of the day. This time we're talking about Eli Lilly, ticker LLY. And why, oh, why am I talking about Eli Lilly? Well, a couple of things. First, we had earnings that sent the stock down from 900. Then we had the executive order on drug prices that actually saw the stock go up, because yesterday was just one of those days where everything's going to go up. So quick reminder here, folks, if you're using our interactive charts tab over on Zacks.com, this is what you get. If you do the slash, I like to pull up this ribbon, the moving average ribbon, because here you can sort of cheat the system on the free stuff and get 4 moving averages in one indicator, and then I put the RSI. Now you can go up in here to the settings, which is this little nut over here. And for me, I'm a 50 and 200 day guy. And for whatever reason, I like this to be cubby blue on the chart. So there we have it. So we got our 50, our 200 day, and our RSI down here. Now the RSI is used for overbought and oversold periods. So overbought over 70, oversold under 30. And you notice the last little dipsy do we got under 30 was in April, right at those lows around 860. Didn't get overbought, but then that earnings day came in and things got bad. So what happened here? We're in a nice positive trend heading into October, and then that was it. So coincides right around the time of the election. And there's been a bit of a malaise because there is sort of this uncertainty hanging overhead in the whole drug space of, what's going to happen with these prices. And obviously one of the campaign promises was that these drug prices were going to come down. And then yesterday, of course, you had the executive order saying, hey, we're going to cut these drug prices 80 to 90%, which shocked me to see. They took this stock under, so it's 722.18 is the low intraday, but if you look in the pre-market, they took this thing under 700 and then rallied it up, had a decent day yesterday along with the broad market. But now look, under a little bit of pressure here, got down to 740 today. This is on Tuesday, May 13th. Okay, so what else do we got here? Decent volume day. You got this 200 day that came into play and has rejected action. You also have the 50 day that has rejected action. So what does that tell me? It tells me you're looking for downside targets. And this swing low, this April low, in retrospect, that was a nice little downside target action there. Notice this sort of lower low that got, put in here, right? This took out the 2024 and 2025 lows. And then yesterday, like I said, intraday we got down here, but nice little bounce. Not good though, because you still have the 50-day, which not only is overhead, but a negative slope. 200-day overhead, negative slopes. These are all negatives. So I would be looking for a little bit more downside action, a retest of this low before I'd be comfortable, buying into something like this. If you're looking for a quicker sort of swing and you're impatient, you can use yesterday's lows as a stop loss if you want to go long and strong today. I'm not really comfortable with that move. I think patience will pay. I think you'll get a little bit more clear of a signal. Now, here's another little part of this is that you have this big gap up in April that has been filled. So once these gaps get filled, that's when you can say, okay, well, maybe we go ahead and reverse again. So if you're going to trade it that way, you really got to look for a breakout into this gap. So we've filled the gap. We've come under the gap. Now, if it gets back into the gap, that's where you get potential breakout to the top side of that gap. So what price level is that? So here we have 756.30 is the top end of that gap. And that's actually a level that we saw today, intraday. So again, this is Tuesday. This is intraday. Whether this holds or not, below this level says a lot to me. Okay. So already, if you had a sustained break of that 756 level, let's say it closes above 756 today, there are traders that would enter long towards the end of the day here or wait for the close. Some people jump it and just do it before the close. But anyway, most people will wait for the close. Then you go ahead and load the boat. You can put your stop just below today's action and with targets, up filling the gap. That's one way to play it. For me, I would be more conservative. I'd be waiting for a retest of this April low before I even thought about something like this. And it's just because of the uncertainty, right? This isn't me saying that Eli Lilly is a terrible company and everything's going to zero. And I fully understand that this was a $900 stock just a couple of weeks ago. So this is still that post earnings move, but now you've added the uncertainty of these executive orders and what might happen. So just, I think when you're looking in terms of a market that's been bouncing back and looking for a place to go, I don't know, for me personally, if the drug stocks are where I want to be right now, I'd be looking for a little less risk, let this de-risk a little bit, before I'd be looking at adding something like this to a portfolio of mine. There you have it, folks. That's my chart of the day. Eli Lilly. If you're here on Zacks.com, be sure to subscribe to the author so you don't miss any of these chart of the day videos that I've got going on. If you're on YouTube, subscribe to that YouTube channel and come back tomorrow. I'll have another one for you. For everybody here at Zacks, I'm Dave Bartosiak, and we will see you